Well, TGIF and good morning, traders. Glad you're listening in. Thanks for listening in, and happy Friday to everybody. So Dale, I got asked immediately. Dale is not here. He had a rough night. He's if you all don't know, or you're unfamiliar with, Dale's he's been struggling with some migraines recently. So he let me know that he had a rough night, and I'm like, dude, you don't have to be here today. Ryan came in and we've got it. Go relax. So he is not going to be around today. But that's all right. We're gonna cover it without him. He'll be back on Monday. He'll be fine. So let me first start off talking about a few things that have been moving overnight. Well, obviously the dollar continues to move, and that's the one thing. Whoops, let me get rid of that. Something else that we're looking at in ForexAnalytix. If you guys want to know like all the the updates that are coming through that I'm publishing, or you just jump in the chat room, or you can see through here on the updates timeline. These are all the new charts that have been coming out. And speaking of which, I can pull up the euro sterling. If we're going to be forming an inverted head and shoulder pattern, we have to stop basically where we're at right now. So I was just looking at some of the euro crosses. Euro has been really under pressure since this week, since the ECB meeting. It's on some of the crosses. But yesterday we had the Fed, and the Fed has obviously weakened the dollar quite substantially. If you go look at the dollar index, the dollar has slid fairly aggressively, following the last 2 days of testimony from Fed Chair Powell. I came away looking at, or hearing Powell and thinking, well, I guess we are going to get a cut in June. How do you feel about Powell's testimony and the way the dollar has been moving the last couple of sessions, Ryan? And good morning. Well, maybe Ryan won't be jumping in.
Hello.
Oh, there you are. Good morning, Ryan.
1 2 1 2 testing. You all right?
Testicles 1 2 1 2. You got two. Good. All right. Let me hope you have two.
There was one comment from Powell that I picked up from yesterday, just the one, where he said, I can't remember the exact line now, they are a bit more confident in getting to their inflation goal. Let me see if I can find the exact line that he said. 1 second. Yes, we're not far from confidence to cut rates, which is a bit of a different slant to the we need more confident. But it's all falling. Everyone's now cut middle of the year, June, July, whatever. That's cut time. The ECB have come around to it. The Fed have been pointing it out. Everyone's lining up. Even the central banks that don't follow the Fed are lining up to follow the Fed. So yeah, we're all around it, and the dollar is obviously still the bigger game for all of them when the Fed cuts, and that's why the dollar's suffering a little bit of late.
Yeah, and really, I mean, it looks heavy, especially when we're going into a jobs report. And I mean, I'm looking at the jobs report thinking, okay, I was thinking today or this week, excuse me, that maybe this is going to be, the month where we start to see, some tiredness in the jobs report. But you combine that, I would say that's a prevailing sentiment right now. You combine that with some of the comments from Fed Chair, dollars under pressure. Usually, most of the traders listening in know my opinions when it comes to big data. Usually, we find ourselves pre big release, like somewhere in the middle of the range, like a trading range. But in this case, we've actually just slid right into the data. And then you could arguably say, well, the range and the dollar index might actually be this, which if you look at the 50% retracement of this entire move right here, it's that might end up being, the middle part of the longer term range that we are dealing with. But for right now, the dollar index is really under pressure. Hey, good morning, K-Man. How do you read this?
Hi, everybody. Good morning, Blake.
Good morning.
Hi, how do I read it? Yeah, the mood has changed a bit, right, in this week.
Yeah.
I found Powell fighting back a little less, but still not there yet. But the interesting thing is that others are now starting to hint as well as time may be nearing, and on that in that area, there's a lot of similarities between what's going on at the Fed and what's going on at the ECB. Hence, I think that's one of the reasons why the dollar is suffering, but also euro crosses are trading a bit lower. Yeah, I think that's what I've been saying for a while. I think June is cut time, and also. I'm not a huge follower of it, but seasonalities don't work in favor of the dollar either. Or shall I say, they rather work in favor of stuff like sterling, Aussie, Kiwi, even the Canadian dollar, I think. But yeah, it wasn't uberly dovish, but it was very unhawkish. I found Powell all in all.
Yeah, and you know that's and you see the dollar really leaning into like I said today's data. Today's data and I'm gonna come back to you guys in a few minutes, but and get your take on how you feel the jobs data is going to come out and why. You know, I know we've had a lot of other data this week that's given us kind of a look-see, if you will, into what we might be expecting from the NFP. So gather your ideas, Ryan and K-Man. I'm going to come back to you guys here in just a few minutes. What I want to do, though, really fast is I really want to go through just a couple of pairs with everybody. Let's start off with the dollar yen. So the dollar yen, and I'll get your comments here about the yen too. The dollar yen has just stopped at the 38% retracement. So if you guys were unaware, that you know we were coming into that 38% retracement, you know, the dollar yen, we've been targeting you know, this level over the last couple of days, and you know, we should find support at 146.84. That was the 38% retracement. We got as low as the 40 or 87 level. So we are starting to find buyers coming in, which makes sense ahead of the jobs report. Now if that number comes in weaker, you know, I know I've mentioned it this week, and so I'll just mention it again really fast. I think this is going to be my preferred short, you know, with yields looking a little weaker. Dollar yen's obviously already being weighed down because of BOJ expectations. A lot of you know, banks are starting to think that it's getting priced in, you know, for a move from the BOJ this month. But all in all, you know, you factor that in with some weaker data, the dollar yen might actually be trading closer to like 145, you know, within the next couple of days, you know, on some weak data. So I think the dollar yen's showing some weakness, but we are at really critical support here. You know, you look at the euro's climbing up towards the 618 retracement. One of the standouts, and I know K-Man has been playing this to the long side, has been the Aussie. And I think the Aussie, you know, was probably viewed this week as more of a value play. You know, technically we got to break out, but I think a lot of people look at stocks and say, well, the stock market is basically at all-time highs. We're not getting pullbacks. Everything's very shallow. Every pullback is more and more shallow, which, you know, is just leading us higher, not giving any opportunities for shorts to get out, not giving any opportunities for longs to get in. And you know, at some point you're going to get risk assets playing a little bit of catch up. We saw the dollar Mexican peso this week slide towards below 17, towards its rising trend line. You had the Aussie dollar say, you know, probably half the market looking around at the Aussie dollar and the 65-cent level going, what's it doing way down here? You know, and let's pick it up. So you got the Aussie rallying, the Kiwis, you know, caught a bit as well. And the dollar Canadian has dropped and broke below an ascending trend line as well. Even as, you know, the Canadian economy the Canadian data we're facing today as well. So speaking of which, we do have, you know, Canadian jobs report that's coming out the exact same time as the NFP. So we might get a little double whammy here. But before I come back to Ryan and K-Man and talk a little bit about, you know, what their expectations of the jobs report is, I also wanted to point out that let's take a look at Bitcoin and let's take a look at gold, because those assets have been absolutely, you know, on fire. You got gold breaking out to new all-time highs. 2200 is the next stop. That's the 127% extension of this. It's that spike, that one that happened on that lonely Sunday open in Asia. That 2200 level comes into play. Let's not ignore the fact, just you can look at this longer term trend line that's kind of been brushed here. We've had this dotted for, I don't know, maybe a year, but we're tagging that resistance. Yeah, we're slightly above it, but really at pretty key levels. Obviously, if we have some strong data and the market does or the NFP comes in stronger than expected, which has been the case for a lot over the last year and a half, 2 years, gold would come under pressure on a strong print. So just keep that in mind as we're up at pretty, I would say, not lofty. Well, we are at lofty. We're at all-time highs. We're at high levels in gold. Still could be higher, but just keep that in mind. I got another question earlier today about Bitcoin from one of our traders in the chat room, and I was giving him an answer just about 10 minutes ago. If you guys don't know how to get to the ForexAnalytix chat room, if you're in the ForexAnalytix community, this is where all of our conversations are going down. But I got asked by Bubble Boy about about Bitcoin here, and I'm just going to give him a real quick answer, and you guys can hear it here as well. The 70,000 level is obviously a big level. It's all-time highs, and I would expect, and I don't like to trade big breakouts like this, but I'd have to expect there's a lot of stops and there's a lot of people trying to play momentum above 70,000. So if it breaks, you kind of got to just go with it and just trade with a tight stop. But I also mentioned to him, I'm not into chasing the market, but in this case, you can see we're wedging in Bitcoin. And the problem when we're wedging, it's just the same thing with the S&Ps. It's not giving anybody an opportunity to get long. It's not giving, shorts an opportunity to get out. So when you wedge like this, the risks are very much tilted to an upside break. So if you really think that you want to be on the long side, you've got to be involved. Just, play with a tight stop. I mean, and preferably after the data comes out. But look at Bitcoin. It does look poised to break out to the upside if we have a positive response in the stock market, which I would expect. A data that's not really weak, like meaning we don't have zero jobs created or something like that. If we create 120,000 jobs or 100,000 jobs in the, and the maybe wages come off a little bit as expected, and unemployment maybe ticks up a tick or something like that. It's not horrible data, but it's bad enough that keeps everybody thinking, hey, yeah, the Fed probably will be cutting rates, and maybe they'll cut them a few times going into the end of the year. As long as we get that, risk assets should continue to rally. I don't see any reason why they wouldn't. Matter of fact, let's go back to Ryan, and let's talk about expectations of how you feel the jobs report's going to come out, but more importantly, what the reaction component's going to be. So Ryan, what are you thinking here? I mean, we've got we've got to look at a lot of different data throughout the course of the week. And then here we are faced with, not only the US jobs report, but we got the Canadian jobs report coming up as well. And here's so everybody can view the data coming out. What are you thinking here going into today as far as data goes?
Bad data is going to be the icing on the cake for Fed doves. That will just further cement the expectations for rate cuts. Good data, I can see that getting any dollar rally on that, getting a good whack on the head, especially in dollar yen. But there's also a thought that you've got to think maybe we're going to overextend some of those moves if in the like euro dollar, dollar yen that's already under the cosh. So yeah, I'm mainly looking to play it the same way, euro dollar the same way as I did for the ECB. Any decent dip, I'll look to maybe pick up for a run back towards the highs on good numbers, but bad numbers, and we'll probably see maybe a move to 110 in euro dollar, dollar yen maybe knocking under 147 properly, and everyone else rallying against the dollar. So that's my expectation.
Go ahead. I'm
Yeah, I was
sorry.
going to say that's my expectations. As always, you've got to look at the numbers. The headline numbers important. Obviously, if it's in a 100 to 300k range, forget it, move on, and look at the
Wait
wages
a second.
numbers.
If we create 300,000 jobs, you're going to say move on?
I'm talking about the importance.
Oh,
In,
okay.
in importance, if it's a plus number, the market's going to go, yeah, okay, par for the course, you know. But it's the wages numbers that then is going to take over, because if wages go up to 4.6% instead of coming down to
Yeah.
4.4, 4.3%, that's going to change the market expectations for rates. That's the important number for that one, more so than the headline. So look at the headline. You know, if it's a huge number, if it's a 500k, yeah, we're going to move. But the wages is going to be equally, if not more so, important.
Okay. Now let me ask you this real quick about price action. So if we get, like, let's say stocks just take off on a tear, like right after the data comes out, you know, it's not too hot, not too cold, but the porridge is just right, as the fairy tale books would tell us. And the S&P just takes off. Do you chase the market higher here at these levels?
No, I never like chasing markets higher unless we're breaking a big old resistance point. But we've got none of those up here. You can try a break of the highs, but you'd need to keep it fairly tight. You know, the current high is what, 70 at the moment. So yeah, if we break above there, you want to maybe try and go with a bit of momentum, but you wouldn't ever stop much below sort of 60, something like that, if you went that way. Conversely,
I want to
you want
point
to
a
look for,
technical, can I point a technical
yeah,
level out really quick? If you look at the highs from basically January of 2022 to the lows where everybody thought we were going to go in a recession. This is the October 22 lows. The 127% extension comes in just above 5,200, which is roughly about 50 S&P points from where we're at. Just give everybody a heads up, that's a big technical level that's coming up ahead of us. So I'm sorry, Ryan, go ahead.
no, that's all good. Yeah, I'm not a fan of those extensions because we've done nothing but carve through them for the last 2 weeks.
Yeah, they're like speed
But
bumps.
if you know, that's what tech is, though. It gives you somewhere to lean your risk against. It's right up against the big figure. So yeah, I would expect a bit of trouble there, come what may. But yeah, to trade it, there is no signs of a top at the moment. We've had, you know, short-term attempts. You know, the famous 50, 40, 50, 50 area. And we've done nothing but continuing moving higher. So for me, there is no real evidence of a top yet. But if we see a move up and it can't take out that 51.70 high, then that gives you shorts or shorts who are looking something to lean on. Otherwise, you've got to be looking at buying a dip against one of the decent support areas at the moment.
All right. Well, you know, Marty just wrote in, what would cause the Dow Jones to drop 3,200 points in one day? So let me re-ask that question for Marty. Marty says, I have an out of the money 35,000 put in the Dow. How am I going to get that to my strike? K-Man,
I
can you
have the
answer the
answer.
question?
I have the answer.
Go ahead. Go ahead.
You get a negative NFP. You skyrocket above 4% in the unemployment rate. Don't worry, your Dow will be back at 35,000.
So give me an odds on what's the chance of that happening right now there, K-Man.
Can I give you the answer on Monday, or send you?
All right. Well, now that we've heard Ryan, and thank you, Ryan, for giving your detailed analysis and explanation of how you feel about the markets, and I'm going to come back to you for your best trade setup, because I want to talk about that for the three of us, like what our best trade setups are here. K-Man, what are your expectations with data? What do you think is going to happen? And at this point.
What I think is going to happen. Okay. It's such a darts game, these non-farm payrolls. What we have seen in the prior months is that the bumper reports usually get revised a little bit lower. So
yeah,
the market talks about it. But assuming that I don't. Are we going to get sooner or now a bit of weakness? It's possible. The interesting thing in the earnings is that labor cost indices have come down, so that may be a little hint that it may come in a little bit on the soft side. The best for risk is a soft but not disastrous number. So that is like slightly weaker on the non-farm, somewhere between 100 or 150K, and then 0.1% or so lower on those earnings. A bit of a sluggish participation rate, perhaps. That is going to get to keep the markets going, and likely the dollar continuing to come off. I mean, we can never exclude anything. As I say, it's perhaps a 1% or 0.1% or 5% chance, I don't know, to all of a sudden get a very bad number. But if that would have been the case today, I know they supposedly don't have the numbers, but would Powell have been so relaxed over the past 2 days? So somewhere I'm saying it may not come in as a disaster number, and then you just continue to trade the way we have traded it. That's my view anyway. And can I quickly reply to Charles?
Yes, please do.
Charles,
What did Charles ask?
Charles says, how do you account for higher US growth but lower rates versus euro? Okay, so there's a couple of things. There's not just one straightforward answer. First of all, the US market is much bigger than any other market. So the interests in the US market are much bigger than any other market. So we have seen US yields come off. We see also that the yield differentials are not doing much, but they're moving a little bit against the dollar right now, just a little bit against the dollar right now. And being the bigger market, that's going to have your impact. Then, and we haven't had this correlation for quite a while. We had a lot of decorrelations of late between FX and the equity markets. But sooner or later, some of this correlation where you get like equity markets continue to rally, fresh highs in the S&P, fresh highs in the Nasdaq and stuff, it is typically correlated to a bit of a weaker dollar. And then you see you were talking about the euro. I know the difference in growth, but the market is not continuously trading the differences in growth either. You get different correlations at different periods. Otherwise, it would be easy. You would just sell euro dollar and wait until that thing hits, I don't know, 0.80 or so. But that's not the way flows work all the time, right? So it's just a matter of where the flows are and what the correlations are. We have seen US yields come off quite a bit from, just to name the 10-year, from the resistance at 434, 440. We are now trading at 406. Okay, so that has an impact on the dollar, regardless of the other side of any pair.
Well, I appreciate it, and I'm sure Charles does appreciate your comments here too as well. Hey guys, I just want to mention this. This is the ForexAnalytix tweet about the non-farm payroll. If you want to try to be involved in our community, because we give away 3 monthly subscriptions, so you can have it, for free and be in our community for a month. All you have to do is guess the non-farm payroll right, but you have to address this tweet, and it was put in our chat box already. So make sure you guys. Yeah, twice. Thank you very much. And you can see all the replies. Everybody listening in right now should be doing this, just replying to this email. I'm at 99,000. Call me an optimist. That's going to be what causes a blow off top in the stock market. Let's talk about the price action today. If you look at the S&P, I'm just gonna say this. Marty said I had a dream last night, and so that's why I was thinking about the Dow dropping 3,200 points. I'll tell you what, the one thing that I would say is, I've been thinking that the market's going to get some sort of blow off top soon. And the problem with this market is, as you see here, as we wedge, we're at all-time highs, we're wedging higher. That means, again, bears can't get out, bulls can't get in. And so bulls are, and everybody's just kind of forced to chase the market higher. In this type of recipe, as we're sitting at highs, I know most of you are thinking, oh, well, we'll just roll over then. It's, that's natural. Yes, we're in an ascending wedge. Yes, I understand. But remember, I gotta just go back and say there's so many bears all of 2023 that everybody's just kind of forced chasing the market. Anybody who had been listening to all those macro analysts that are so highly regarded on CNBC and Bloomberg all of 2023 that were very bearish, they were like, no, stay on the sideline. We're going to get a recession. All of those funds and people that follow all those economists they've been forced to chase the market all year this year. So that is causing this acceleration higher. So you get some data that just complements that. We might go into a blow off top type of scenario today. So Marty, you want to know how we get some sort of big reversal? It could be like that. And I don't hope that happens. And it's not like, the base case, but boy, it does feel like we're getting, steps away from that. So anyway, just going back to that point. So I'm going to just say this, as far as data goes, if the data is weak, I think the dollar yen, slices right through this 38% retracement. And I think the risk is that we, come on and start taking on this 50% retracement and these lows from back here in January, at the end of January. On good data, if the data is really good, I think the euro is probably, set up with a decent short with a 618 sitting right here. You could probably be on the short side and put your stop somewhere above here and, just kind of sit on it. Because I do think that the European economy is weaker than the U.S. economy at this point. So strong data, I think, traders will be like, oh, what a great price that we get to short the euro at. But that's my views right now. And I don't have any euro shorts on at the moment. And I don't have any dollar yen shorts on at the moment either, even though I'm long yen through other ways. And people that are in the ForexAnalytix community know how I'm trading it. But as I get ready for this data, Ryan, let's hear from you real quick. What's your best setups in either situation? And then the K-man. So while I get set up, go ahead, Ryan.
Yeah, well, as I said, I'll be looking for similar to what I said over the ECB. A dip in euro dollar will look enticing to add back or add more to the positions I've already got on there. I jumped into that one on the ECB as we were talking about on F.A.C.E as well. I'm interested in potentially hitting a dollar rally in dollar yen. It needs to be a chunky one though. But also, I know a weak number. You're talking about the downside, yes, but we've done over 350 pips on what is essentially going to be a 10 pip move in interest rates in Japan. Yes, it's
crazy,
it's monumental.
right?
It's monumental. This is a historical moment, but I'm skeptical. How much more are we going to go just on a 10 pip rise, and the BOJ saying we might hike again once in the next 5 years. The lower it goes, the more cautious I'll get about how much more it can go.
Yeah. All right. Very good. K-man, we got a couple minutes.
Yeah, well, I'm still running. I've taken pieces off to just be on the safe side. I'm still running a bit of cable and Aussie dollar. I think those are still oriented very well. And what I've taken off, I may reload if we get like a shallow dip on a not too explosive piece of data. And I'm a bit afraid if it's a bad number that we are in for a bit of a painful Friday for the dollar.
Yeah, I mean, the dollar does look weak. Boy, it does. Hey, real quick, I don't want to leave our friends in the north, well, my north anyway, in Canada. We do have Canadian jobs, and the Canadians been pretty strong today following the BOC this week. But I think any dip down to 134 is a buying opportunity, in my view. But you guys have any views on Canada? I know we just got a few seconds.
Really, it's a bit of a lottery, those Canadian data. If you're in doubt, watch the balance between full and part-time employment, I'd say. But yeah, could be a double whammy or a saloon door in Canadian dollar today.
Right. All right, guys. Hey, we got about 15 seconds till the data. This is the data flash that comes with ForexAnalytix. Remember, take advantage of being involved in ForexAnalytix. Even if you don't win the NFP competition, it's $1 for 10 days. Come join our community. It's $1. Download the mobile app while you're at it. All right, here's the dollar index to the left, S&P in the middle.
275, 275.
275. 275.
Wages just a
Damn.
tick lower. Wages 0.1 lower.
Unemployment rate up 3.9%, but that
Yeah.
was slightly on a higher participation rate.
So we might not get too big of a rally here in the dollar. Don't get excited with that headline number, guys. That unemployment rate.
The participation rate was unchanged.
Okay, and
So,
average hourly
that
earnings coming down.
That is a
But look at
worse number
yields.
then for the unemployment rate because the participation rate was unchanged.
Yeah, see, if you trade that headline number, you know, and you got long the dollar just on the headline number, look at the euro ripping right now. Yeah, that, I mean, that would be between the average hourly earnings and the unemployment rate, dollar's getting smoked. Yeah. All right, that makes sense to me. How do you guys read this right off the bat? Do we get long stocks and go long for 6,000 right now in the S&P?
Yeah, probably. You know,
It's got to be it, right?
The guys are calling for Bitcoin to double, perhaps the S&P as well, you know.
There we go. 140,000 on Bitcoin, S&P to 6,200 today. But look at this.
I'll take that. I'll take
higher.
that.
rip higher. I don't know. Ryan's gonna have to go through the data and figure out who are the winners of NFP. I know some of you are sitting at home or in your home office going, I'm a winner, I'm a winner. You guys are all winners because you're here with Ryan and K-Man today. So just count yourself lucky at this moment. But look, S&P is reversed, Euro's higher, strong number. You can't play into that. It was the weak underlying other data that's doing it. All right. Ryan, instant reaction here. What are you thinking? Look, the euro
it's not overly bad data, but in the context that the market is looking for any reason to smack the dollar, it's got enough probably from that unemployment rate and the wages coming down a bit.
So you got to be careful with this 618. See, if you are like, oh, I'm playing in the dollar strength, this is the place to do it. I'm not saying I'm not doing anything. I haven't done anything yet.
Yeah.
But if I was going to be long the dollar against the euro and short the euro, it'd be right here. And I mean, just you put in a tight stop, and if you're wrong, you're wrong. That would be my gut instinct. K-Man, what are you thinking right now?
Yeah. I still think the dollar will remain just on the defensive. I'm not going to say it's going to really crap the bed, but it's likely going to remain on the defensive because it's just been the way this market has traded it. And yeah,
And look at gold.
Yeah, it's absolutely flying, right?
Sure is. I mean, this is one thing that does, prevent me from being like too bullish. The dollar is just watching gold just take off, It's hard to be bullish the dollar when gold's just ripping like this, knowing that there's like no risk aversion. I mean, if the market was like crapping the bed and gold was rallying and dollar was rallying, I'd be like, oh, okay, that makes sense. But right now, it's a tough trade trying to be long dollars here. So, K-Man, let me ask you this: Canadian data. You saw the data come out. Any initial reaction here?
Well, a good balance. There's it's a good number. 40 versus 20K expected. The balance is also good. Full-time versus part-time employment. Participation rate stable. Just one tick higher, the unemployment rate. Why? I don't. Yeah, probably because higher employment change, same participation rate, perhaps mechanical. Nothing that I will specifically look to aggressively trade on the back of it. I'd say personally, it should not put pressure on the Canadian dollar. Let's put it that way. I wouldn't think so.
Okay. Well, we are just kind of hovering still below like the 618 retracement. And by the way, this is a longer term 38% retracement if you guys haven't seen it from this low to this high. So nice little confluence. We're trading below right now, but dollar's quite mixed at the moment. I mean, if you were out there just trying to scalp around that euro around the 618, doing all right, it's coming off now, but I don't know. I don't know what I want to do here. I actually haven't done anything, and I don't know if I really want to do anything. Ryan, you doing anything?
Yeah, I might have a nibble if we get another dip in dollar yen. I might have a little nibble long, just because there's nothing horrendously bad in this number, apart from that unemployment rate. But 3.9%. I mean, it's well below full employment
Wait,
numbers.
we're
So
off of 1965 unemployment lows?
yeah, exactly. So if the market wants to try and make a mountain out of a molehill here, it's welcome to, and I might try and fight that. But we shall
Yeah,
see.
okay. And again, I threw out 1965, not actually that don't try to fact check me on that. I just know that unemployment rate is at levels we haven't seen since like the 60s or somewhere like that without having the data right in front of me. And
No, I'm fact checking you, mate. I'm doing it now.
I know you are. Of course you will. So look, I think you guys got to be a little careful today. Dollars, very mixed following this data. Gold, if gold turns around, and I'm not, well, I don't really have any expectations with gold other than it's, still breaking out. But if we start getting below like today's lows, which is 2154, which that means we've turned back below, this big breakout point at 2150. We start getting below there, I might get a little excited about doing something with the dollar. But right now I have really no reason to cheer. Before we turn it off for the day, Cayman, is there anything that you're like, hey, this is screaming at me right now?
Oh, I'm my base position still a bit short Swiss franc, and I've actually added to my longs sterling Swiss today because I found the well, two things. We saw the euro crosses come off, but then especially euro sterling was looking quite cappy yesterday around 85 and a half, and that's why I added some to this to the sterling Swiss actually. And there's a level here. We're on a level 73 quarters. If that goes in 112, 73 quarters, I think that's a gateway to 114. That is something the other side. And I just added a bit over the numbers to my cable, but already sold half of it out. I'm more in the mood of playing ping pong in the market today than really. But I'll keep my base short dollars running.
Yeah, all right, that makes sense. I'm just really loving my biggest position on my board right now is short Swiss yen. I love being short Swiss. I think it's just, it's just very, very people are just selling into it. Any type of rally that we see. Pound Swiss, obviously, you're doing the same. Euro Swiss is even finding buyers as weak as the euro is. It's even finding buyers on dips. So I still really much appreciate this one. Ryan, what are your final thoughts before we tune out for the day?
Final thoughts is don't go blowing all your good profits this week on messing around on this. If you had a good week, just sit back, watch what happens, take your profits, go to the pub, enjoy life, enjoy your family, and have a great weekend.
All right. Well, guys, I want to say thank you both for being with us today. Ryan, I'm sure over the next few hours we'll be, going through all the non-farm payroll guesses, finding out who is going to be the winners or who the three winners are for ForexAnalytix. And if you're not one of them, just, try out ForexAnalytix for $1 for the next 10 days. Try it out. But Ryan will be with you probably over the course of the next couple of days with those who have won their free month. And, even we give out free months to people that are already in our community. We just tack on another month to their subscription. So I want to thank everybody here listening in for being with us today. Ryan K-Man, thank you for your analysis throughout the course of the week. If you guys don't listen to Ryan and K-Man every day, they are live during the European hours on the Flow Show. You can find the Flow Show link right on the ForexAnalytix site. They're there every day getting you prepared for the trading session. If I wasn't sleeping, I'd be there. By the way, we do have a time change over the weekend here in the US. So I'm about ready to embark on my next 7 months of getting up stupid early hours of the day. So
You
it's
can come
already
and join us on
stupid.
the flow show now. You'll be able to get half hour of the flow show.
I will for like the next 2 weeks, right? You guys don't change
Yeah.
your clocks for 2 weeks. Yeah,
Exactly.
I'll be jumping on the last 15 minutes, I think. So anyway, hey, I want to thank you all for being here. I really appreciate you guys tuning in. Remember, we're here every day, Monday through Friday. It's always free on the F.A.C.E show. So we'll catch you all on Monday. Have a great weekend. Good luck. For those of you in the Forex Analytics community, I'll see you on the Morning Edge in approximately 35 minutes. So you guys, gals, have a great one. Ryan, K-Man, you guys are the best.
Yeah, same to you, mate. Cheers.
Everybody. Thank you, Dale. Thank you. I was going to say thank you, Dale. Thank you.
You did. That's all right.
Everybody.
I'll be Dale today.
We still thank Dale. Whether
I
he's
don't have
or
those.
not, we thank him. All right.
You have to have those really cool sayings, and I don't have any of them in my data bank right now. So
don't eat yellow snow. There you go. There's one.
All right, there's one. All right, thanks for that. All right, you guys all have a great weekend. We'll see you. We'll catch you. Like I said, on the Morning Edge. All right, bye bye.